Two of the biggest banking executives down under explain how the state of our economies compare and how beneficial New Zealand banks are to their Australian owners.
We're happy with the returns that we get in this business and we want to grow it.
New Zealand has fared worse.
How much worse?
Well, I don't know, that's $1 million question. You know, we've certainly...
Is it $1 million worse?
$1 million when you've got $110 billion lent is not a massive problem.
It's Monday the 15th of April and you're watching the 100th episode of Markets with Madison. New Zealand and Australia love to compete, and right now our economy is losing to theirs. We're in a recession, they're not. Our official cash rate is 5.5%, theirs is 4.3%. They got Taylor Swift, we didn't. You get the picture. Despite our economic differences though, we do have a lot of shared interests, especially in banking, where the big four here are all Aussie owned. So how does that banking brotherhood really work? ANZ Banking Group makes 17% of its operating income in New Zealand, adding 1.5 billion Australian dollars to its 7.5 billion bottom line. ASB added 13% to the Commonwealth Bank of Australia's most recent annual profit, while Westpac earned 12% of its annual revenue here. The best though is the Bank of New Zealand, bagging its owner National Australia Bank 20% of profits, making BNZ the group's third largest earning division. NAB has been led by a Kiwi, Ross McEwen, for the past 4 years. But he just stepped down, and Andrew Irvine has taken the top job, a rise from its business borrowing book. On his first week in the new gig, he was in New Zealand, visiting its earnings accretive cash cow. Bank profits here have been growing since COVID, thanks to a big increase in net interest margins, the amount banks collect between money coming in interest repayments and going out the door in deposit rates. But that's now changing as more savers take advantage of higher deposit rates. So NAB's New Zealand operation is not as optimistic. Demand for debt domestically is dropping among property buyers, businesses and farmers. While in Australia, in some corners it's growing. Andrew told me NAB's business lending book grew by low double digits in percentage terms in the month of February this year. But BNZ CEO Dan Huggins says there's signs of struggle here. For the first time, I interviewed them together at the Trans-Tasman Business Circle event in Auckland last week. Well, thank you both so much for your time today. I do interview CEOs for a living, but this is actually the first time that I have had not one but two, and the banking executives. So that's very special to have your time today. And also everyone in the room, I know it is difficult to get time away from the desk, especially 2 hours on a Monday, so really do appreciate you all being here as well. I'm going to start with you, Andrew, first, given that this is, day 5, I'm told, into the job.
That's right.
It's quite a statement that you're in New Zealand in the first week, really, of the new gig. What message should we take from that about the timing of your visit and the role that the BNZ business plays in the wider NAB group?
I mean, look, this is a really important business for National Australia Bank, and we're really proud to be in New Zealand and be a bank that really cares and provides great service for New Zealanders. So, there's nowhere else I'd rather be than here on day 5 as in my new role.
Nowhere else we'd rather have you too. Now, I'm going to go straight to profitability, if that's all right. And it's no secret that Australian parent banks make some pretty nice money out of their New Zealand operations. And if you look at a measure of that, one that you call a measure of success in your most recent annual report, return on equity, that between NAB and BNZ is actually about the same, at around between 12 and 13% on an annualised basis. But the net interest margin here is certainly bigger. For BNZ, it's at 2.4%. For NAB, it's at 1.74%. Given that the OCR and rates are higher here, how are you thinking about continuing to benefit from that opportunity that presents itself more so here than it does in Australia?
Well, I think first of all, cost of capital for us and our business is about 10%. And so we do seek to have businesses that return in excess of our cost of capital. We're happy with the returns that we get in this business and we want to grow it. Dan would love to be a bigger part of the broader National Australia Bank's earnings mix. And as long as we're relevant to customers here and doing good things here, I'd be open to that. I think I'll leave it to you, Dan, to talk about net interest margin, but we are seeing in both markets high competition. A big part of that is that as the cost of money has increased, predominantly driven by increases in rates to ward off inflation, banks are now under pressure on their margins because customers are paying more for their borrowings. And so, we've seen margins drop in both markets as a result. I don't know, Dan, if there's
Yeah, look,
anything
I think on the NIM side, just comparing the headline NIMs becomes, a little bit challenging. The mix of business is different. We've got a preference share here, which actually shows up in NIM numbers, but actually in other balance sheet constructs, you would end up with that more as wholesale lending. So I think there's differences there. Probably the ROEs is a better one to compare.
I do want to pick up on your point of competition, and if we can specifically focus on that locally, Dan, I'm sure you both read the Commerce Commission market study that came out only 11 days ago, before you were in the top job though, to be fair, Andrew, so no stress if you haven't read it in full. But the top recommendation and suggestion from the Commerce Commission on that was to capitalise Kiwibank, to allow it to compete harder with banks like BNZ. That is effectively, if that happens, harder state-sponsored competition. Do you view that as a threat?
I mean, Kiwibank is a fantastic competitor, and I talk to my team all the time about people need to stop talking about the big four Aussie banks. There are 5 really competitive banks in New Zealand, and Kiwibank's a great competitor. They're growing, they're getting capital from that. So I think that they're a great competitor, and we already see them as a significant threat, from a competition perspective. So. I think if the government were to continue to provide them that capital, it wouldn't change our view that they are a very, very strong competitor, and that's good for New Zealand.
We are going to compare and contrast, but we're actually going to compare and contrast our economies, Australia versus New Zealand. It's a game that we have loved to play for as long as I can remember, at least. We're always wondering who's got lower interest rates, who's got lower food prices. You definitely have cheaper fruit and veggies, by the way, Andrew. Whose wages are better, whose productivity is higher, right? Andrew, what are your thoughts on how aligned our economies are or not generally, and also right now?
Well, Australia and New Zealand, one of the things we've all got to remember, are probably 2 of the best countries in the world in which to live and work. And we sometimes forget that. You see the geopolitical dramas that are happening in many other parts of the world right now, particularly in the Middle East and in Europe. And you forget sometimes what terrific locations we live in. So I would say that in terms of economic similarities, I think there's more that is the same between our countries than there is things that are different. Right now, obviously, due to the need to fight inflation in both markets, interest rates are quite a bit higher than they have been in the recent past. And that's dampened economic growth. And it's meant that people are not enjoying their lives as much as maybe they have in the past. It's just harder today. Now, what we're seeing in both markets, I would say, is that people are generally getting by. People are generally able to pay the bills. They're having to juggle. They're having to make choices. They're having to budget. But in both markets, I think they're doing that successfully, even if it isn't a lot of fun. Now, one thing that we are also noticing is that the averages don't tell the story. And I think often we focus too much on rates. But only 1 in 3 households actually own homes. And everybody's impacted by prices. And I actually think over the last couple of years, it's prices and price rises that have actually been the bigger issue in both Australia and New Zealand. When you think about it, 1/3 of people own homes and have no mortgage, typically older demographic. Then you have 1/3 of households that own a home and also have a mortgage for that house. And then you've got probably 1/3 of people, and it could actually be rising, who are renters, typically new migrants. And if anything, and we don't talk about it enough, I think they're probably struggling the most right now.
So it's the erosion of purchasing power for everyone, not the RBA or the RBNZ hiking interest rates.
Correct.
If it is the erosion of purchasing power, then whose fault is that?
it's not about fault. I think it's about the fact that as a result of the COVID pandemic, governments all over the world had to worry about, a once in generational threat to economic output. And they did that by putting significant amount of money into the private purse, both businesses and people, so that the economy didn't fall through the floor. And you could argue maybe that some of that economic stimulus went on for too long, but ultimately what happened was that there was too much demand chasing too little supply, and that created an inflation problem, and that's what we're now solving.
Absolutely, and Dan, what it also created here, as we know, is a recession. Hasn't quite happened in Australia yet. Is New Zealand's economy just at a different speed than Australia's and feeling the effects of the cycle Andrew spoke about at a different time? Or are we actually on different racetracks and we've now segregated completely?
I don't think we're on different racetracks now. I think 12, 18 months ago, I think we would have argued actually New Zealand was probably 6 months ahead of the cycle versus Australia, and we talked about that a lot at the time. But what we've seen is actually much more convergence of where the two economies are in the cycle. What has happened though is that New Zealand, on a per capita GDP basis, New Zealand is about 3% down, Australia is 1% down. So whilst we are in similar places in the cycle where perhaps both of us towards the end of the year will end up with interest rates being cut, we're coming off slightly different bases. So, New Zealand has fared worse than Australia, so therefore starts a little further behind.
Andrew, does Australia enter a recession this year or next?
I don't think so. I think we'll see positive growth of around 1%. But you have to, the per capita comment, Dan, that you just made is an interesting one. I think in both markets we're seeing very, very strong inward migration. And so while in Australia's case you're probably going to see economic growth of about 1%, people aren't enjoying it. And on a per capita basis, we're in both markets a per capita recession. So that's kind of interesting. It's essentially migration has kept both economies doing much better than they otherwise would have.
Yeah, we spoke about this a little bit earlier, so let's actually discuss the real state of things. And you've even said, let's not use averages. And you told me earlier that economic data only really shows what's happening above the surface. It doesn't show everything that's happening beneath it. You've spoken about this a bit, Andrew, but Dan, I'd love a domestic view on this. What is the real state of things, particularly in business? Because NAB and BNZ both have very big lending books. So what is both your data internally at BNZ telling you, and also your conversations with customers about the real state of things?
Yeah, and we briefly chatted about this before. What you see in the data is that actually things are okay. You're not seeing huge arrears. It's certainly a bit of an uptick from where it was during COVID, but it's okay. The problem is, you look at that and say, oh, everything's okay. That is not the reality when you get out there and talk to customers and talk to Kiwis, talk to small businesses, mid-sized businesses. They are finding it really, really challenging. And so we've got, I think, this difference between the data, which says, oh, it's okay, and the experience of the vast majority of Kiwis and the vast majority of businesses, which is, boy, it's really, really hard. And we're surviving and we're getting through, but boy, we're having to make some tough decisions about where we spend money, whether we invest, what we do and what we don't do, whether we hire that next person. So that's what we're seeing. Now, importantly, what we're also seeing as people look forward is that confidence is quite good. And so again, when you talk to customers and businesses, they're saying, well, I think it's going to get better. I'm just holding until I get a little more certainty. But again, there's light at the end of the tunnel and gives us sort of good hope that we get through this period, we should be okay.
What are your expectations for delinquencies going forward then? Should we expect them to get worse?
I think they'll get worse. Yeah, I think.
How much worse?
Well, I don't know. That's $1 million question. We've certainly.
Is it $1 million worse?
$1 million when you've got $110 billion lent is not a massive problem. The bank is very, very well capitalised. The balance sheet is really strong. The customers are strong, but we are in a very challenging period, and we're a bank. And banks in challenging periods are going to, see some customers who get into trouble, and we're there to support them through that. That's a bank operating as a bank, and if we didn't see, some of those things happening during these times, then that would perhaps suggest that we hadn't made the right decisions and got our risk setting rights when times were good. So, as I say, I'm not worried about that. The bank is incredibly well capitalised, and we've got dozens of people who are there helping customers every day where they're finding it challenging. But yeah, I think arrears will go up.
Andrew, is NAB going to have to increase provisions because of that risk?
Well, we're actually very well provisioned, I would say. We're actually the best provisioned bank of all our competitors in terms of the ratio of provisioning to balance sheet.
That's your capital ratio, correct?
Correct.
What's the percentage if you don't
We're
mind
like
asking?
1.47, 1.48, which is quite high. And we'll see how that goes. I'm in no hurry to necessarily bring that down. I do think we're yet to see our book see the delinquencies come through as we would have expected at this stage in the cycle. And when we compare to prior downturns, we aren't seeing our book behave in the same way that it would have done in the past, particularly in both the home loan side and on the business side. So that's interesting. We'll keep watching it, but so far I think that's really enlightening. I think in both markets, lending standards as a result of regulatory guidance has increased, and so there's a bit of a conversation in Australia today about the fact that are we even banking some of the sectors of the economy as a deposit-taking institution that is feeling more of the pressure, and we'll have to see. Right now, Australia, for example, is one of the hardest markets in the world to get a credit card, and so we just don't give credit cards or credit to certain parts of the economy that maybe we would have in the past.
This certainly speaks to the shared challenges, I think, across banking in both Australia and New Zealand. And as much as I've even brought up the fact that we love to compete and contrast and compare our economies, there is a lot of shared interest, and banking is very clearly one of those industries where it's quite clear. Andrew, what do you think that Australia and New Zealand, at a business sense, can still do better together, and what's NAB doing about it?
Well, I think facilitating trade, since the COVID pandemic, I think you've seen a world that's become more isolationist. And I think that is a little bit concerning. Over the last 100, 200, 300 years, I think one of the things that's created the most global wealth and frankly global security has been interdependence and trading with each other. And so there is a little bit of concern with all the geopolitical dialogue out there that if countries focus more on themselves, bringing supply chains closer to home, that I think that has real negative repercussions. And I think Australia and New Zealand in many ways can buck that trend. We have very shared history. We have very similar geopolitical and regulatory environments. A lot of our citizens spend time in each other's countries.
Exhibit A.
So, I think there's much more we can do together. And one of the things I'd love to see between NAB and BNZ is more fostering and facilitation of businesses who are seeking to grow and expand in both jurisdictions.
I actually want to bring up something that Ross McEwen, your predecessor, called an epidemic, was scams. And this is, something that banks are absolutely battling with, as are, consumers and people as well. What about the shared interest of that? And I'm assuming stronger together.
Well, I think that's absolutely right. It's the right observation of, whether it's scams, whether it's financial crimes, they are some of the areas that, the collaboration across the businesses is absolutely strongest. And it's not just NAB BNZ, actually, we're also seeing some of the industry approaches in Australia then work with us from an NZBA perspective to inform what we're doing from an industry perspective. So I think you're 100% right. There's a clear area of common ground there where it's not competitive at all. It's actually about stopping criminals from ripping off Kiwis and Australians, and it's really important.
And this is probably one of the areas that takes up the most significant of my time. And Ross is right to call it an epidemic. I think of it as a plague of our times, frankly, where bad people are trying to take your hard-earned money. So we spend a lot of time with our colleagues and with our customers, educating them on the risks and to be more fraud and scam aware. And we have recently seen some success. So it's a real delight that this is the first year in, I think, many years where our customers' scam losses are falling in Australia. They're down year over year by about 30%. And in any other year that we can remember, they've doubled and doubled and doubled and doubled. And so I think people are starting to become a bit more scam aware, and we've certainly added significant capabilities, a little bit more friction in some of the payment processes, so that we're making it harder for the bad guys. But we've still got a lot of work to do. And as I said, there's probably nothing that takes more of my attention than this.
Well, your time is expensive, if you don't mind me saying. So how costly of an exercise is that becoming for not just NAB, but all banks?
Oh, I mean, and there's the cyber issue, and we know that cyber is a major threat to not just banks, but any business and frankly government institution for that matter. And cyber is not just now criminals, it's also in many ways state-sponsored. So very significant threat. And as we become more digital and as our payments all digitize, I think this is just going to become an ever increasing problem. And so the areas of cyber, the areas of privacy, the areas of fraud and scams, I think are exactly where I should be spending my time.
But I thought we should take the opportunity, given that Andrew was only here for a day, and I'm sure you're going to have a meeting if you haven't already after this, but I thought then we wouldn't all be involved, so I want us to be included in this part. Is there anything
I'm worried.
Are you worried? Yeah. Is there anything that each of you would like to better understand or know deeper about each other's business operations?
Well, I'm here to learn. I think one of the things, and I'll be back again, but I want to become more intimate with this market. I'm obviously not from New Zealand personally in the same way my predecessor was. And so I'll probably spend disproportionately a bit more time here and a bit more time with you, Dan, just so that I can become more informed about the market and the business.
Yeah, look, I think from my perspective, one of the benefits of having Andrew come into the CEO role is I've worked with him now for 2.5, nearly 3 years. We know each other well. He is well across the strategy that we have at the BNZ, how important we are to New Zealand and what we're trying to do in New Zealand. So actually there's real continuity there. And we did have discussions this morning and indeed over the past month or so after Andrew was appointed. And for us, the benefit of that consistency and stay on the path, serve customers brilliantly, support New Zealand, nothing's changed there. So that's pretty positive from my perspective.
Andrew, we'll finish on this one. I think your appointment signals quite a new era for NAB. When Ross came in, it was very much culturally fixing NAB post the Royal Commission and the scandals that came through that. What do you think that NAB will look like under your leadership? What will be different?
Well, yeah, you're right. Ross was the first external CEO in over 160 years at our bank. And he came in, I think, when the bank needed a bit of a reset. And credit to Ross, I think over the last 4.5 years, we've become a better bank. And we're delivering on what we said we would do. I think we're a better bank for our customers. We're certainly a better bank for our colleagues. And my job is to continue that journey. These are big businesses. NAB's been around for over 160 years, and I hope to be a good steward of the bank and leave it better than I found it. And for me, this is all about serving customers brilliantly. And the ethos that we'll talk about is just how we can be a better bank for our customers day in and day out. It's the only thing I'm going to be talking about over the next few years, because my view is that if we look after our customers and do that really well, everything else will take care of itself.
Dan, what are you optimistic about, especially about BNZ under Andrew's leadership?
Well, I think it's that. I think the BNZ is a great bank. We exist to serve New Zealand. We've been here for a similar period, 160 years, and I think, as Andrew said, our orientation is serve customers brilliantly every single day, help customers when they need that help, and the rest will sort itself out.
Dan, Andrew, thank you so much for your time.
Thanks,
really
Melissa.
appreciate it. You heard both of them there seem pretty optimistic about interest rate cuts this year and just how much their customers are depending on it. The big question then is what happens to our economies if we don't get that in 2024? Is the optimism misplaced? please get in touch and let me know what you think. But before you go, I just wanted to say an enormous thank you. This is the 100th episode of my show, and they say in the world of content that you don't count until 100. So really, this is just the beginning. I do believe, though, that it's already made a bit of a difference, and hopefully helping you understand the companies and trends that you're investing in, and encouraging more interest in equities and other assets. I appreciate you. Please keep watching, commenting, subscribing, and always sending me your ideas. Now go put your money to work. Thanks for watching Markets with Madison, the New Zealand Herald show for interested investors. If you want to stay up to date with financial markets, click the subscribe button below, and you can watch our other episodes here. Stay up to date with all the business news and numbers as they land on nzherald.co.nz.